I think one of the most surprising things that I've ever encountered over the past several years is when we talk about killing the idea quickly, people just don't expect that to be a thing. It's like different. And I've talked with other investors. I've talked about some of our investors, other fund managers, and it seems that it's something that maybe not unique to us, but very rare. And I just found that completely surprising because to me, uh, I guess the history of it matters, to be fair. And one of the biggest challenges when I was starting out, and even when you joined, is that there are just so many stocks in a global universe that, from a practical perspective, you just can't spend all your time chasing an idea and spending weeks and weeks on something just to realize that it's overvalued or the quality is low or the accounting is terrible or whatever it is. And and so we kind of over time developed and especially after you joined, could really formalize that part of the process where we just really want to kill the idea quickly and move on to the next thing. So there were practical reasons why we did it. And then over time, we discovered this weird behavioral side effect to it, which is obviously we're long only investors. And so as equity investors and generally as long only, we're naturally optimistic about the future. And it just means that we come into an idea. If we're looking at something, then we're already coming in with a positive view on it. And so kind of trying to flip the question and look for reasons not to invest, look at what's bad about the idea, kind of changes the mindset and makes sure, it doesn't make sure, but at least predisposes you not to fall in love with it.
Absolutely. And it's not even just falling in love with an idea. I remember when my last firm, where, and actually even there, you know, I may have had limited coverage, only software and chemicals, but that's still a big universe where you need to, you don't want to spend a month on an idea that doesn't go anywhere. But I remember one stock where I did spend a lot of time working on the idea, and in retrospect, you know, maybe it was a bad idea, but because I'd spent so long, I made a call on it. And it was a call I probably shouldn't have made. And I don't think I would have done that if I had actually had a much better process of saying, how do I kill this idea quickly?
And it's subconscious, right?
Absolutely. Once you have spent a long time working on something, you don't want the answer to be, we do nothing with it.
So I think it'd be interesting, Jack, you joined a few years after we developed this. So you came in and saw it. What was your impression and kind of what did you look at it over time?
I joined, I think, over 4 years ago now. And, you know, as an analyst, I think it's always it's always what you want to do to really dig into a company and spend as much time as possible. And it's very hard, I think, instinctively to want to push an idea off of our WIP list, our work in progress list. But actually, it does sort of make a lot of sense when you think about the fact that we are generalists. We have a very large investment universe of thousands of companies. We do still need to have a very high velocity of ideas coming in and out of the work in progress list. And so while it still feels very against instinct sometimes, but it's really important for us to marshal our resources, particularly time resources, on ideas where we can add value and where we can find interesting investments. And that's, I think, what's so useful, and I think it really adds to our process.
And I think we've had this conversation. I've certainly had it with Aubrey many times. Is when you're in the deep looking at one idea and you're not looking at other ideas at the same time, you kind of like forget what's happening in the market, and something that might look interesting at a moment in time, and the market or some other idea that you weren't looking at goes down 20%. And at that moment in time, other opportunities arise. So like you said, I like what you said, like the velocity of ideas coming through the investment team. There's an element of the more, I think Peter Lynch once described it as it's a game of flipping rocks. The more rocks you flip, the more opportunities you're going to find. And it's very important to go through many, I think, in order for you to actually find things that are worth investing in.
No, completely.